So with yesterday being Fed Day, I decided to go back to my fun Robinhood small account challenge where I put $1,000 into my Robinhood account just to see how far I can take it in about a week or two. And yesterday I was able to take it from $1,000 to all the way over $6,000 off of one trade in one day. And I want to take you guys through my thought process. I want to show you how you could have done it in a less risky, more beginner friendly way, because there was risk associated with that trade. I was playing 0DTEs, which are short-term expiration option contracts. And anytime you see somebody getting 3, 4, 500%, they are definitely trading 0DTEs, which can be very lucrative, but they can also be very dangerous. So I want to show you guys exactly where my stop loss was, how much I was risking to make that trade and make that type of gain. And yeah, just walk you guys through everything, because my goal with this channel is to really help you understand my thought process and give you an edge and an upper hand on markets. Or if you're brand new to this all, just try to break it down to show you what a trade would look like and what we do every day in the markets. And a lot of people will say that trading is gambling and it's just all about luck, and that this trade was lucky. And there was luck associated, but I also want to show you guys that I'm not bluffing when I say you can have an edge and an upper hand on markets, because you can see I alerted this to the group at lunchtime. So 12:05, I posted I was looking for calls if gray box holds. And you can see the chart right here. It was already pre-drawn, that gray box, that level right there. We were nowhere close. We were getting close, but we had not hit it yet. And I also want to highlight the fact that when I took this trade, I was actually not even in front of my laptop. I was on my phone because I had pre-planned everything. And so it goes to show, and I'm all about the freedom aspect of creating that around your trading. So not being glued to your laptop, because most people work full-time jobs. They're not able to be in front of the screens all day. So you can definitely still do this and execute as long as you pre-plan, you prepare ahead of time, and you craft your discipline and your skills. So that way, when you are out, you can take a quick trade on your phone and you can take advantage of opportunity. And so I alerted that around lunchtime. I said something again at 12:10, and I also said around 12:30, because I usually don't trade during lunch. Things are slower. And so I wanted to go on a hike with my dog. I wanted to get outside. It was a beautiful day. And so I set alerts and I let the trade come to me, which usually are the best trades. If you set alerts and your alerts get hit, that means you're not waiting, you're not watching the screens all day, you're not chasing something. You planned for it to hit that level for you then to look for calls or puts or whatever you want to play. And those are always my 100% biggest winners, is the ones that come to me and I'm patient for. And so once my alert got hit that we were in this gray box, I'll switch over here. What I was looking for is to see if buyers were still sitting at this level. And I also had in my head that 2 p.m. we had the Fed meeting. I really didn't think we were going to have a big reaction. Definitely not a bad reaction to this Fed meeting, just because we already have a little bit of cooling off on inflation. So I think the Fed's going to let the markets try to bounce a little bit, just personal opinion. Do I think the economy's in a good place? No, but that's a different topic. But I was basically watching for it to dip back into this gray box, which you can see using yesterday's level right here. When we dipped into this box, which is a demand zone, there were buyers sitting here, which pushed it up into close. I was looking for the same exact thing to happen on this overreaction pullback going into the Fed meeting. So we had a pullback, which this actually is very painful to me because I missed this trade. I alerted to the group that we were looking for puts, but we didn't hit my target. I never got alerted because I was looking for a new high of day. I was looking for over 186 to then start shorting. We never hit that. And so I missed this opportunity, which is completely fine. You miss one wave, you can catch the other. That's always my motto. I actually caught a piece of this, but I missed my sized entry. And so I saved my size. And when I say I caught this, I was scalping on my other account, my Lotto Robinhood account. I try to execute with size, and I'm really, really picky about my entry and exits because I just want to do like 1 to 2 trades on a small account and be done. And so with this one, I was waiting for my levels to get hit, and I decided I was not going to trade that day unless my level got hit. And sure enough, I was out walking the dog. I got an alert. I saw us drop down into that box and have a very nice bullish candle. We bounced, which was indicating to me that buyers were still sitting at this level. This was also around the end of lunch and we had about an hour into the Fed meeting. So it was just the perfect storm. In my head, I had pretty much played out every single scenario and my risk level was right below this gray box. So I had a stop loss right under here around 183.30 for size and then 183 for any type of contracts that I felt comfortable holding on more volatility. So it was actually a very, very small risk versus a very, very high reward, which is what you want to look for. So even though we were going into a Fed meeting and there was extra volatility, I honestly did not have any risk on this trade because my entry was so solid. I entered right here. My risk level was under here. I was risking probably, let's say like 20% maybe. And then I caught 500%. Now, if anybody wants to argue you're playing zero DTEs, that's so risky, yada, yada. It becomes very risky when you don't know how to manage your risk. Like that is just, at the end of the day, that's all that matters. If you know how to manage your risk, you can play whatever the heck you want. And so me pre-planning my levels, I knew that we had caught some resistance with sellers right here at the beginning of the day. And so once I saw this candle right here, I immediately sold. And I think it sold somewhere right in here. Now, if I was on my laptop and I was on my computer, I would have definitely took off a chunk right here because as soon as this green candle printed, that was basically the peak of the volatility. And then your IV is going to start to drop and your premiums are going to start to drop when we chop around like this. So I definitely didn't get the perfect exit, but that does not matter for me at all. That was such a solid trade. And for me, it always means so much more if it doesn't stress me out, if I wasn't risking a ton of money, if I followed my plan. And the cherry on top is when I can do it and not be glued to my laptop. That is what matters most to me. So really quick, let's talk about how you could have done this without it being so risky. So I was playing options that expired that day, which is how I got the big percentage. But let's say that you were playing Friday expiration, which gives you a little bit more wiggle room. Even though those are still considered weeklies, you could have definitely gone the week after, and we can look at those before we wrap this up. So I do want to show you though that if you were playing Friday expiration, those calls still ran. The conservative ones that were 186, they still doubled. So you can see if you got your entry somewhere around 30, they went to actually 70. So they more than doubled, but obviously you're not going to get the perfect entry and exit. So definitely could have made 100% with less risk, not trading the zero DTEs, and your risk level would have been right underneath here because if we failed the gray box, that meant buyers were not there. Let's go to the trade tab and let's go out a little bit further. So let's see if you did like next week. Let's say that you just were even looking more towards a swing trade perspective and you went about a month out. Let's go to December 16th and then let's go to, you can look at the volume and open interest as a little cheat here. So let's look at the 190. These are going to be more expensive, but you can see that these went from $2 all the way up to around $2.40. So that was also a very great gain as well. So the further you go out, the more expensive the contracts, the less volatility. That's why they're more beginner friendly. These are all things that I teach in my 8-week program. I do still have hybrid spots available if you guys are interested in a community that's founded on education that also has a mix of trade ideas and trade alerts like this IWM calls where I told the group what I was looking for when I was entering. But it's more just so you can understand what trades I'm taking and then understand why I was taking that trade. And if you don't understand, that's where the group comes in and you can ask all sorts of questions. So I hope this was helpful for you guys. If it was, make sure to give this video a thumbs up, share it with friends and family. And if you want more of me on a day-to-day basis, I post more on my Instagram. So the handle is in the description box down below. Everything is in that master Linktree link. And if you have not watched it already, I also have a free trading seminar, which will go over the account type you need to be able to day trade with under $25,000. So do the small account challenges like I do on Robinhood or Thinkorswim, which is my main broker. There's also Webull. There's a bunch of different ones. I also have videos on my channel explaining different brokers if you don't even have one yet. So go check those out. Thank you guys so much for watching and I'll see you next week.